In this video, we will be solving two problems with regards to income tax. We are Team El Ingon. We have our members. We have Mr. Arvin Gerald Alfeche, Ms. Nadine Hyacinth Balabat, Ms. Adele Rose Calvo, Ms. Hanin Haji Omra, Mr. Ryan Miguel Lozano. We have Ms. Jamila Malaco, Ms. Caril Bianca Pulido, yours truly, Kathleen Diansuan, Ms. Angela Rain Torres, and Ms. Jalil Christine Pentic. Let's proceed with the first problem.
Problem number 10. Before reading the problem, let's first define what temporary differences are. So, according to past 12, these are temporary differences because their effect reverses in one or more subsequent periods. Temporary differences are differences between the carrying amount of an asset or liability in the statement of financial position and its tax base. Temporary differences are either taxable temporary differences or deductible temporary differences. The following difference enter into the reconciliation of accounting profit and tax profit of Malunay Company for the year ended December 31, 2021, which is its first year of operations. So we have life insurance expense valued 100,000 pesos, excess tax depreciation of 2 million, warranty expense of 200,000, litigation accrual of 500,000, unamortized computer software of 3 million, unearned rent income deferred on the books, which is appropriately recognized in taxable profit of 400,000 pesos, and interest income from long-term certificate deposit valued 200,000 pesos. So question number 1. Taxable temporary differences are those that result in future taxable amounts when the carrying amount of the asset or liability is recovered or settled. They arise when the current amount of an asset is greater than its tax base or the current amount of liability is less than its tax base. In the given problem, we can evaluate that the excess tax depreciation will reverse equally over a 4-year period from 2022 to 2025. Thus, it is considered as temporary differences as well as the unamortized computer software. The total taxable temporary differences is 5 million pesos. In order to get our deferred tax liability, this will then be multiplied by the tax rate, which is 35%, resulting into 1,750,000 pesos. So, if you're asking what deferred tax liabilities are, these are amounts of income taxes payable in future periods in respect of taxable temporary differences. Deferred tax liabilities result in higher tax payment when it reverses in the future. Question number 2. Deductible temporary differences are those that will result in future deductible amounts when the current amount of the asset or liability is recovered or settled. They arise when the current amount of an asset is less than its tax base or the liability is greater than its tax base. In this case, we have the warranty expense, litigation accrual, and earned rent income as the deductible temporary difference, with a total value of 1,100,000 pesos. To get the deferred tax asset, we will multiply the deductible temporary differences by the tax rate, which is 35% multiplied by 1,100,000, which equals to 385,000 pesos. And if you're asking what deferred tax assets are, these are the amounts of income taxes recoverable in future periods in respect of deductible temporary differences, the carry forward of unused tax losses, and the carry forward of unused tax credits. Deferred tax assets result to lower tax payment when it reverses in the future.
So, current tax expense according to past 12 is the amount of income taxes payable or recoverable in respect of the taxable profit for a period. So, in simple words, it is the amount of tax that is required to be paid to the Bureau of Internal Revenue. To compute for the tax expense, we must first find the taxable profit. So first, we take the accounting profit and add the life insurance expense, a non-deductible expense, and deduct the interest on long-term certificate deposit, a non-taxable income to arrive at an accounting profit subject to a tax of 9,900,000 pesos. So taxable temporary differences are then deducted from this amount, and deductible temporary differences are added to get a taxable profit of 6 million pesos. We then multiply the taxable profit by a given tax rate 35% to get the current tax expense of 2,100,000 pesos. Because there were no payments for income tax during the year, this will be the amount of tax that Mulanay Company is required to pay for the year ended December 31, 2021. So for question number 4, in this question, we will solve the income tax expense. So as defined by past 12, income tax expense comprises both current tax expense or income and deferred tax expense or income. So we have to add or subtract all the needed values. Current tax expense with a value of 2.1 million pesos, which we solved earlier, plus an increase in deferred tax liability of 1.750 million pesos minus increase in deferred tax asset, which results in a value of 3,465,000 as the total income tax expense. So we have alternately, we can solve this by multiplying the accounting profit subject to income tax to the tax rate. So 9.9 million pesos times 35%, so it equals the same amount of 3,465,000 pesos.
So we will now proceed to problem number 11. The problem number 11. The accounting profit before tax for the year ended December 31, 2021 for Polillo Corporation amounted to 175,900 pesos and included an interest income of 11,000, long service leave expense of 7,000, doubtful debt expense of 4,200 pesos, depreciation expense per plant 15% per annum 33,000, rent expense 22,800, entertainment expense 3,900. The draft statement of financial position at December 31, 2021 contained the following assets and liabilities. We have 9,000 cash for 2021 and 7,500 cash for 2020. We have accounts receivable of 83,000 for 2021 and 76,800 for 2020. Allowance for doubtful debts 5,000 2021, 3,200 for 2020. Inventory of 67,100 for 2021 and 58,300 for 2020. Interest receivable of 1,000 for 2021 and none for 2020. Prepaid rent of 2,800 for 2021 and 2,400 for 2020. Plant 220,000 for 2021 and 2022 as well. We have accumulated depreciation per plant of 99,000 for 2021 and 66,000 for 2020. We have a deferred tax expense of 30,360 for 2020 and for 2021 it is still unknown and we will solve it in a while. We have accounts payable of 71,200 pesos for 2021 and 73,600 for 2020. We have provision for long service leave of 64,000 for 2021, 61,000 for 2020. We have a deferred tax liability of 720 for 2020 and it is still unknown for 2021. So we have some additional information. The tax depreciation rate for plant is 10% per annum straight line. The tax rate is 30%. The company has 15,000 in tax losses carried forward from previous year. For question number 1, we need to find out the current tax expense or liability. To solve for the taxable profit and get the current tax liability, permanent differences items will be deducted and added to the accounting profit. In the problem, the interest income is deducted since it is considered a non-taxable income. The other expenses, which are the long service leave expense, doubtful debt expense, depreciation expense from plant, rent expense, and entertainment expense, are added to the accounting profit amount since these expenses are considered as non-deductible expenses. The accounting profit subject to tax therefore is 235,800. After getting this amount, temporary differences items will be deducted and added again to get the taxable profit. In this problem, we added and subtracted amounts accordingly from the draft statement of financial position given in the problem, including the given tax losses of the company from the previous year. The taxable profit for the year is then multiplied by the tax rate, giving us a current tax liability amounting to 53,760 pesos. The following are the comparisons of the carrying amount of assets and liabilities and their tax base at December 31, 2021, which will be used as a guide in the calculations of numbers 2 to 4. So, if the carrying amount of asset is higher than the tax base, then it is taxable. If the carrying amount of asset is lower than tax base, it is deductible. If the carrying amount of liability is higher than tax base, then it is deductible. And if the carrying amount of liability is lower than tax base, then it is taxable. We have here accounts receivable, carrying amount of 78,800 and tax base is 83,000. So if we have a difference of 5,000, it is deductible. Interest receivable of 1,000 carrying amount, it has no tax base, so the difference is 1,000, so it is taxable. For prepaid rent, its carrying amount is 2,800 and no tax base. The difference is 2,800, so it is taxable. For plant, with a carrying amount of 121,000, with a tax base of 154,000, you can base it on the solution below. Difference is 33,000 and it is deductible. For the provision for leave, we have 64,000 carrying amount and 0 tax base. Difference is 64,000 and it is deductible. For question number 2, we were asked to find the deferred tax liability. So to find the deferred tax liability, we need to compare the carrying amount of assets and liabilities and their tax base and identify which amounts are considered taxable based on the result of their temporary differences. Also, finding the deferred tax liability means that we are to find the amount where the carrying amount is greater than or equal to the taxable amount. In this problem, the taxable temporary difference amounts to 3,800, which, if multiplied by the tax rate, results in a deferred tax liability amounting to 1,140 pesos.
For question 3, number 11, we need to compute for the deferred tax asset. So as stated in past 12.5 and as mentioned previously, deferred tax asset are the amounts of income taxes recoverable in future periods in respect of deductible temporary differences, the carry forward of unused tax losses, and the carry forward of unused tax credits. So in order to get the deferred tax asset, we first use the asset liability method. This one. So wherein the differences of the carrying amount of the assets and liabilities and its tax basis are being computed. So as you can see, it can either be deductible temporary differences or taxable temporary differences. So in the case of deferred tax asset, we use the deductible temporary differences pursuant to its definition. So we just add it all, so 5,000 plus 33,000 plus 64,000, which totaled 102,000. Then it will be multiplied by 30%, which result in 30,600. Thus, 30,600 is the deferred tax asset of Polillo Corporation for the year ended December 31, 2021. And for the last question of the problem, we need to solve for the deferred tax expense. Deferred tax expense is simply the sum of the net changes of the deferred tax liability and the deferred tax asset. So in coming up with their answer, we first get the change in deferred tax liability by subtracting the previous deferred tax liability from the current one. So 1,140, the deferred tax liability of year 2021, minus 720, which is the deferred tax liability in year 2020, which give us 420. Then, after that, we solve for the change in deferred tax asset, which is 30,600. So it is a deferred tax asset year 2021 minus 30,360, the deferred tax asset in year 2020, which result to a decrease of 240. So, lastly, we get the net changes of the deferred taxes. So we get 180 pesos. And since the increase in deferred tax liability is greater than the increase in deferred tax asset, which in this case is a decrease, therefore, 180 pesos is a deferred tax expense. The relevant standard involved in the two problems is the Philippine Accounting Standard 12, or income taxes. And to sum it up, here are the definitions that is involved in our problems. So this is based on the past 12. So we have temporary differences, which are differences between the carrying amount of an asset or liability in the statement of financial position and its tax base. So temporary differences are either taxable temporary differences or deductible temporary differences. So the taxable temporary differences are those that result in future taxable amounts when the carrying amount of the asset or liability is recovered or settled, while the deductible temporary differences are those that will result in future deductible amounts when the carrying amount of the asset or liability is recovered or settled. Then we have the deferred tax liabilities and deferred tax assets. So as mentioned, the deferred tax liabilities are amounts of income taxes payable in future periods in respect of taxable temporary differences. And the deferred tax liabilities also result in higher tax payment when it reverses in the future. And then, the deferred tax assets are the amounts of income taxes recoverable in future periods in respect of deductible temporary differences, the carry forward of unused tax losses, and the carry forward of unused tax credits. Then, we have the current tax expense, which is the amount of income taxes payable or recoverable in respect of the taxable profit or tax loss for a period. Then we have deferred tax expense or deferred tax income or benefit, which is simply the sum of the net changes in deferred tax assets and deferred tax liabilities during the period. And lastly, we have the definition of income tax expense, which comprises both current tax expense or income, this one, and deferred tax expense or income. So that would be all. Thank you.